Welcome to the Cherry Bekaert Tax Beat, a conversation about tax that matters.
Welcome to this edition of the Cherry Bekaert Tax Beat podcast. For this session, we are focusing on the impact of the huge U.S. Supreme Court ruling on the Wayfair et al. Versus South Dakota, which was from June 2018. We commonly refer to this just as Wayfair, the Wayfair decision. It has just been instrumental in the whole world of sales and use tax and other outreaches into other parts of the sales tax world. This case, just as a quick recap, was about the fairly nationally well-known online retailer, and South Dakota brought a case against them, saying that even though you don't have any physical presence, i.e., no employees, inventory, stores, trucks, warehouses, whatever, in the state of South Dakota, you were doing enough business in the state that you had economic nexus and therefore subject to South Dakota's sales tax regime. And the Supreme Court ruled in favor of South Dakota, and that is what has started this ball rolling ever since. So the gist of today's call is to talk about what we have learned in 5 years since that huge ruling. So join in today's discussion, just like we did 5 years ago, are our two leaders of our sales and local tax practice, Cathie Stanton from Washington, D.C. Hello, Cathie.
Hello there, Brooks.
And Lauren Stinson from Atlanta/Alpharetta, Georgia. How are you doing today, Lauren?
Hi, Brooks. I'm good.
And as always, joining me, my partner in crime, Sarah McGregor from Greenville, South Carolina. So, Sarah, how's life treating you today?
Life is good. You know, I timed this just right. We're recording this on the 5th anniversary of the Wayfair decision from June 21 of 2018. So I think it's pretty timely to celebrate a birthday for this court case.
All right. You would think it's a fun thing to celebrate.
That's right. That's right.
A tax decision. You had it marked on your calendar. All right. Okay, so let's jump in. So, Cathie, you had a very fun little video we tweeted outside the Supreme Court on the day of the oral arguments for the Wayfair. So you were boots on the ground, literally. So what are your impressions from that experience looking back?
Yeah, that was actually a really fun day to just hear all the arguments back and forth. And you really couldn't tell which direction the court would go. But I will tell you, my overall impression was that the Supreme Court didn't want anything to do with sales tax. That was basically the gist. They were sorry they ruled in the first place in Quill, and they were just reversing Quill and stepping out of it. And really, I think pretty perturbed that Congress has not dealt with it. And so really, honestly, not just the U.S. Supreme Court, but other courts, I think the same, that, this really should be dealt with legislation, not through court proceedings. And in Congress, there has been some bipartisan interest to address it, but unfortunately, no movement.
All right. So, Lauren, Wayfair was, at least on the surface, all about sales tax. Which is your primary area of practice. So what changes have you seen in sales tax over the last 5 years since this ruling?
Well, first of all, this is the single biggest impact that I've seen in my career and in the sales tax world. And it really changed the landscape of sales tax as we know it. It's been a huge whirlwind of 5 years, with every state adopting economic nexus, very little guidance, very little support from the states, and companies left just trying to figure it out. So we have helped develop tools to monitor economic nexus, do a lot of training, put in technology solutions to help all these companies navigate all these multi-state responsibilities. So just moving along with the companies as as the states adopted it and keeping them in compliance has just been a huge challenge for everyone.
So, Lauren, this was originally a case about online sellers of tangible goods, but the results of this decision, the states have really launched off and stretched it to other industries.
Right. So, it was all around, Wayfair and selling of home goods, but, as the states dug deeper and you really looked at the impact, a lot more industries were impacted than just e-commerce. So technology companies, companies that are selling services over the internet, certainly SaaS companies, software companies, those were hugely impacted and really never even saw it coming. So we've had to do a lot of education around, sales tax. What are the products that companies are selling, to even know whether or not they had to collect tax in a lot of different states. Manufacturers were impacted. A lot of them were selling wholesale, but just as businesses grown and companies have moved to selling, kind of omni-channel. So they're selling B2B, they're selling B2C, they're selling direct to consumer, they're selling on marketplaces. The world has changed how we sell products and how companies sell products. So all that has been very impactful and certainly impacted by economic nexus and the Wayfair rulings.
Yeah, especially in the technology industry, you have all these startups, right, with these great technology, and they're trying to control costs. They're trying to build it to sell, their technology at some point. They're not sales tax people. They could have 200 transactions because they have a transaction. What's a transaction? That's still unclear in some jurisdictions. Is it a line on an invoice? Is it an invoice? I mean, you can trip that threshold. Thankfully, the states have been removing some of the transaction thresholds. So that's a good movement in the space. But we're finding a lot of our clients in the technology space, when they're going to sell, now being completely surprised that they have this tax liability. And so we're trying to educate them, get in front of everybody, to let them know what that impact is. But I think they have been one of the most negatively impacted industries for sure.
Have all the states codified this economic nexus?
They have. Missouri was the last holdout, and they adopted economic nexus in January of this year. And there's been some changes that we've seen along the way. As Cathie mentioned, some states have removed the thresholds. South Dakota, who actually started all this, they are just removing their threshold now.
The threshold for the number
yes,
of transactions.
Sorry, the number of transactions. So they were
really just a revenues kind of goal or threshold, not a number of transactions as well. Okay.
Exactly. And Louisiana, of all states, I always think of them kind of as being one of the backward states. So, Louisiana, I hope you're not listening to this, but they are actually on the forefront because they've made a change where they have not only eliminated the transaction count, but they've also eliminated what they're counting. So they're no longer counting wholesale sales, which in my opinion, that's kind of the trend that we should be seeing, where states are really being realistic about what they count. So, should they be counting wholesale sales? Those are non-tax sales in the first place. So should they be counted towards that, economic nexus threshold? Same thing with marketplace sales. The marketplaces are all responsible for collecting sales tax. So, in my opinion, they should not be counted towards a company's economic nexus because they're not even taxable sales. So, Louisiana, my opinion of you is changing. You're on top of it and one step ahead of really looking at what is meaningful to count.
Well, let me challenge that opinion, Lauren, just for a minute. What about local taxes? I know that there's some litigation in Louisiana on, if you have nexus with the state, does that really mean you have nexus with all the different parishes? And so how are they doing from a local tax perspective?
Well, we're not going to really get into local taxes because that is a hot mess between Louisiana and Alabama and Colorado. We could do a whole podcast on local taxes.
So it's a good point, though, that I think is one of the most significant issues 5 years out from the Wayfair decision is the local taxes, the states and localities pushing this beyond the authority provided under Wayfair.
Right. And now you have Alaska who imposes local taxes, but Alaska doesn't even impose a state tax, a state sales tax. So, again, we could do a whole podcast on the L in salt.
Okay. So, what I'm taking away, much like the Supreme Court, who doesn't want to be near sales tax, I may be joining that faction as well. But this sounds, so complicated, and everybody has so many rules. I mean, what is the role of technology in providing some kind of solution to all of this, Lauren?
Yeah. So, at this point, it's so complicated that most companies they can't manually do sales tax anymore because you've got to get the rates for the jurisdictions. There's over 13,000 jurisdictions across the United States. So you need some sort of a rate table. If you've got complicated products, you need some sort of system that has product tax codes so it knows what products to tax in what states. There's different nuances. So there is a lot of technology solutions. There's a lot of new technology solutions popping up. Every day there's been a few contenders, to challenge the mainstay tax technology companies that have popped up lately. So, there certainly are tax technology solutions, but we need to, our clients, they need to realize that it's not we're just going to implement technology and all of our problems are solved. That's just the vehicle for making it happen. There still needs to be a lot of, watching the technology, making sure that it is set up correctly, and keeping your hands on the wheel.
And Lauren, that's a good point on the technology, because that's exactly what I heard at the Supreme Court level. The states were saying, oh, there's technology that addresses that. Oh, there's already technology that addresses that. It's simple. It's not going to be an undue burden on interstate commerce. So interesting. Still, 5 years later, it couldn't be further from the truth. Yes.
So Lauren, how are the states approaching enforcement here? I'm guessing they are now getting their arms around and going in and auditing and examining companies and looking for folks that are not in compliance here.
Right. So, certainly we've deemed 2023 to be the year of the audit. We're seeing a lot of audits. We're seeing a lot of notices. Certainly, anytime a company is registered, they are looking very closely at the effective date, because how are you just now registering? So they're getting their compliance through, just taxpayers eventually having to come forward.
Is that where you're getting a lot of client activity today? Folks calling you up because they've gotten notices and are just getting their arms around what their exposure is?
Yeah, certainly notices, but also just, as Cathie mentioned earlier, their business is growing and they realize, well, we haven't dealt with sales tax, and now it's time to start dealing with sales tax.
And it's always better to address it on the front end. Oh my goodness, afterwards. I mean, it's very difficult to go back, not only from a customer relationship standpoint, but just all the administrative difficulties of going back and trying to get that sales tax back from the customer. It's out-of-pocket costs, where sales tax really is not your cost. It's the consumer's cost. It's who you're selling to, your customer's cost. Yet it becomes your cost if you're not abiding by the rules.
And I could see a whole new frontier back several months ago when the metaverse was all the talk. If you're selling digital goods inside the metaverse, where are you and who collects sales tax? There's a whole other set of issues to deal with.
That could be a whole other podcast.
Yeah, it's a whole other dimension to origin and destination-based sales when you're in.
That's right. I'll bring my avatar. You bring yours to the podcast about that one.
But there are states that are starting to impose taxes. Washington, has imposed tax on NFTs. So there is movement in that space.
All right, so let's kind of pivot here to income and franchise. So, I think when this first came out, we made some predictions that this would edge itself into the income franchise tax world. So Cathie, what does it look like now, looking back 5 years?
Yeah, even back at Wayfair, the states had authority to impose economic nexus, and they had been doing that. I think this just really has empowered them to take that, a step further for sure. And not only income franchise, but they're even expanding toward tourism taxes, meal and delivery taxes, and that goes beyond Wayfair that they're trying to get the vendors to collect. But from an income tax perspective, definitely issues where we have a lot of clients that have to collect sales tax in all these different jurisdictions. Well, now the state has the company's name. Now the state knows that the company is registered in the state. So now the states can easily follow up on the income tax side for enforcement. So I think the enforcement is easier for states now. In addition, there have been some significant changes in the multi-state tax commission's definition or interpretation of Public Law 86272, where that federal law was put in place in the 50s, well before the internet-based economy, to protect some sellers from having to pay income tax in all these jurisdictions if they're just soliciting sales. Well, that was supposed to be a temporary law. We're in 2023. And it still holds. And so we really need Congress to address the income tax side now that there's more of a push on Wayfair, that the MTC is being much more aggressive, Public Law 86272, where they're saying any internet activity occurring with your customer, if it's not a shopping cart activity, you have income tax nexus. And that is completely different than the line of reasoning that's been used historically. So what we're really, really needing to see is for Congress to step in, protect the small businesses. It's one thing to have sales tax obligations, which is hard enough, but the income tax obligations can be much more difficult to comply with. And if you have a small seller that has very little income and having to file in 40 plus states, that is a significant cost to them. Income tax returns often are going to be more expensive than sales tax returns from a preparation standpoint. But even then, the state's not even getting any money at all for all this additional compliance cost from the small seller or on the small seller side. We're seeing this in the international community. At least now we are getting international companies that are becoming aware of sales tax. They have to collect. Okay, there's these clear thresholds. They understand it. But now income tax, there's still all this professional judgment. And how does the treaty protection come into play and all of these other issues? And it would be best if Congress stepped in and just really put some limitations, really put some thresholds in place.
All right. I think that's a wrap on today's discussion. Let's take it down to our closing comments. So, Lauren, you want to give your concluding thoughts here?
Sure. As Cathie and I can talk about, Wayfair and sales tax and income tax for days, you can quickly see how complicated it is. And we do this every day. And there's just so many different nuances and things to consider with the laws, with technology, with the states and their positions that, we don't want our clients to go it alone, because that's just, can be a path of minefield. So, get some help, get some guidance, get some professional support to make sure that you've put your company in the right position to move forward correctly.
Yeah, and I would say that if Congress still refuses to act, we're just going to see more litigation. We're going to see the states being more aggressive in imposing Wayfair type rules on other taxes. So without that stepping in, we're going to see more. We're going to see more challenges. The states have been flush with cash during the pandemic, and as that changes, that's going to motivate them to really press the limits on this.
Yeah, and I think from my perspective, I see companies needing to develop agility and flexibility in their reporting function for both sales tax, income tax, really looking at it as a core part of their business instead of as an add-on or an afterthought. That sort of planning and investment in compliance up front will save them a lot of headache and issues on the back end. And sort of take that off the table and let them focus again on their core business.
Absolutely. And it will save them so much time and money when they want to sell their business.
Yeah.
And that kind of leads to my concluding comment that this stuff is complex. but it will catch up with you one way or another. The states will find you eventually. If you go to sell your business, somebody else's attorneys or accountants are going to find you eventually. I mean, so, again, the whole message of proactively dealing with this and getting some really excellent professional help from Cherry Bekaert, of course. So, all right. I think that's the conclusion. Thank you for listening in on our conversation on the impact of the Wayfair decision 5 years later. A quick disclaimer that we are not providing tax advice on this podcast. Please consult with your tax advisor, hopefully at Cherry Bekaert, with your specific tax issues or to discuss information from today's podcast, especially Cathie and Lauren when it comes to complicated SALT issues. All right, check out the firm's website at cbh.com for the latest guidance and materials on this and other tax and business topics. This concludes today's podcast. Please like, share, and subscribe. Thank you, Lauren and Cathie. Thank you, our listeners, for spending your time with us. We truly appreciate it. Let's call it a day and go forth in peace.